Good afternoon, all. It's 4 p.m. on Monday, February 26th. I'm going to give you a recap in the market today, the SPY ETF. After we spoke this morning, things went really nicely and according to plan. After doing all our work, you're looking at the weekly chart in the SPY. And just quickly, we spoke about those two inside weeks. Well, we gapped open out of those two inside weeks and didn't look back. That was a very, very strong point to get long once we opened up today. Let's go to the daily. Here's your daily. After that 6-day battle royale, gapped open, we held the gap. Now I'm going to show you the 30-minute chart. I said earlier today I wasn't going to be here for the opening. I had an appointment. But when I got back at around the 10:30 time frame. So here is Friday's close, and here's Monday's opening on the gap. First hour and a half, we actually traded down. Never filled the gap, but we traded down. Once we took out that 10:30's high, which is around 276, I got long on the trade. I bought a call. And basically, after doing all that work, you just let the market do all the work for you. So I stayed long this time frame, and we came into balance, and I got out of the trade. One trade the entire day, but a successful one. Okay, let's go to our reference points now for tomorrow. We'll start with the upside. So tomorrow's first reference point will be today's high, which is 278.01. The next reference point will be 279.14, which was an afternoon rally high from February 2nd, right inside this day. When the market was getting hit real hard, we rallied at one point up to 279.14 and rolled over again. That's your second reference point for tomorrow. And then the third one, which will be the big one, is this gap here. It's the bottom of that gap, which is 280.68. So 280.68 would fill that daily gap. Those are your three references on the upside. So now your downside reference point. Well, your first one today, we had single prints. We had a trend day up. We had one set of single prints, and those get filled at 276.89. So a little over $1 from where we closed would be your first downside reference point. Second one would be the beginning of the gap from today. So that's today's low, which is 275.26, and that gets filled at 274.71. So that would be your second reference point, those two numbers. And then your third reference point would be single prints all the way down right now at 273.64. So to recap real quickly, bulls took control late on Friday after that 50-day moving average battle. And today they firmly took control when we gapped open high. A gap is a form of excess. Excess ends one auction and begins another. Well, this balance in auction ended once we gapped higher. Same on the weekly. We had a 3-week balance with 2 weeks inside of each other. We were looking for more market-generated information. We got it today with that gap, and we held it. As long as we hold that weekly gap, the bulls are still in control. I still believe the all-time high, which I've mentioned many times before, is in the afternight hours, which was at 286.96. That's not going to hold. It's never held before where an all-time high in the S&P has happened in either the pre-market or the after-hours session. So keep that in mind, whether we take out the all-time highs on this run-up or the next time, it is something that will fall. Have a great afternoon. Hope you had a good day trading, and I'll speak to you tomorrow morning prior to the opening.